Hello everyone, this is Martin. This video we're going to take a look at last week's trading activities and opportunities and things that I did mention in last week's video. This is for the week of May the 30th to June the 3rd, okay? So we're going to start off with the Euro USD, and we're going to go back to this vertical red line. You can see here, this is with the close of the previous Friday. So that's the previous week Friday. Then we have the Sunday, Monday trading right here. And then the next one, we've got the Tuesday, Wednesday, Thursday, and Friday. We see this huge up candle. That's the result of the non-farm payroll release, the information being not too good for the US dollar, but much better, obviously, for the euro, which is on the opposite side of the euro USD pair. Okay, so let's take a look. Starting here, we have a big down day. This was a down day that brought price all the way down to this support area I had outlined, and you can see here. Um, we also have the 200 moving at the simple moving average. Normally, price bounces off of the 200 simple moving average. It is the grandfather of all moving averages. It's the one that's most widely respected. Price usually does, like I said, bounce off of the 200 SMA. So you can see with the next day, the Sunday, Monday, we had an up day. So here we see buyers taking price up. It ended up being an inside bar, but this actually is a reversal candle, especially when you see this type of formation coming off the 200 SMA and here the gray rectangle as I have outlined. So we have a reversal candle right there. I would have taken a trade just above the high of this bullish reversal candle, and uh, and doing that, it would have given you at least up to here 39 pips, okay. If we would have held on to the trade, as good for all the way for 221 pips with the close on Friday. So, an amazing trade opportunity right there. You have to look out for these reversals. This is what I call a U-turn. Price went down to support. The next candle is a reversal candle, a bullish white candle, even though it's quite small. The bulls are taking price higher, the buyers are taking price higher, and that would give you an indication that, well, price is reversing, especially off of the support. Now, the other thing you can do is this is the daily chart. Start drawing trend lines and look for break of trend lines. So here we have a trend line. You can see I'm drawing down. So this candle, you see this candle on the Wednesday, broke above the trend line, also closed above the 100 moving average. I would have taken a trade at the open of the next candle right there. The next day would have been a down day, not a huge down day. You would have stayed in the trade and caught the Friday going higher. Okay, and another trend line is from the high here. Here's a peak. You know, we have peaks and we have valleys, okay? Here's a peak there. Same thing. This candle closed above the trend line. So, um, and taking a look at that, if you would have gotten in there, let me just move this just a wee bit. Okay, at the open of the next right there, you still would have made 184 pips. So that's the Euro USD. Okay, here we have the British pound USD. Just the daily chart. And last week I did mention that price was basically going sideways. I was hoping for one good bearish candle to the downside, and my bias was for a buy trade. Um, this here, even though it's bouncing off the eight is not a very strong support area. I probably would not have gotten in after this. Okay, however, the next day we had a huge bearish engulfing candle. You can see that right there. This completely engulfs this previous up candle. Okay, and I would have gotten in after that because this candle did close below the 21, which is a much stronger support zone. So I would have gotten in there, and that would have been good for a short trade to the downside for at least 76 pips. That's pretty darn good, you know. And then understanding that price was coming down toward the 50 SMA, which is now a very, very strong support area, as well as the gray rectangle, which is also support. So now that was one trade. Now the next trade, take a look at this. Prices come down to a very strong support area, the 50, also the gray rectangle, but we had a bit of a reversal candle right there. Can you see that right there? And that's indicating that price most likely would bounce up higher again. Again, watch for any type of reversal candle off of major support or resistance, not like a minor moving average like an 8, okay? Um, and I would have gotten in just above the high of that, okay, the high of this candle to be on the safe side. So uh, getting in right about there still would have given you about 40 pips. So, you know, making some pips to the downside, some pips to the upside. Okay. And the other thing is, let's switch to the LEOD here. And this is super important. Again, going back to that trade on the downside. So looking after we had this huge bearish candle, engulfing candle that engulfs the previous candle right here. You can see that. So this candle came down here, draw in a trend line on the LEOD strategy. Here's the trend line. This candle kind of just closed at or just below the trend line. I would have opened up a position right around here, and I've drawn this in for you, 1.4452, somewhere right there. I would have had what's called a pending sell stop order, and if price was going to go down lower, would have hit that, and in this case would have been good for about 42 pips. Okay, so that's using the LEOD. You can see right there, getting in at this level, the blue RSI, taking a look below the chart, is well below the yellow sentiment line, and the histobars were decreasing toward, getting smaller, getting toward the zero line here. Okay, so that's the British pound USD. Okay, here's the Australian USD. I did suggest taking a sell stop below the 0.7155, and I actually did say below that. I'm just taking a look at my notes. Yes, I did. Sell stop order below 0.7155. So, you know what? This bothers me in a way because this little tiny candle, do you see that? Let me just zoom in a bit. Okay, take a look. See this little, let me move that. Okay, just a second here. Okay, it's this little tiny candle right there that might have taken your sell stop order, and if you know if it would have taken your order, then the next day obviously price went up higher, you would have probably gotten out with a loss on your trade. This bothers me in a way because in retrospect I should have made the stop loss. I'm sorry, this pending, I suggested the pending sell stop order a little bit lower. I've got to be a little bit more conservative on suggesting, you know, pending orders. In this case, it probably should have been 0.7150, okay, rather than 55. But again, I did say below this, so some of you might have placed a pending sell stop order if 2, 3, 4 pips below this, and you would not have been caught with this little candle that reversed the week's trend. So again, so just letting you know there was no real trade opportunities on this here. Now we go to the New Zealand USD. Okay, here I did suggest the same thing exactly as in the Australian dollar. Take a sell stop order between or below 0.66 78. Let me just check my notes to see if I did that. Yes, I did. Sell stop order below 0.6678. So again, this little tiny bar right there, it's a little bullish doji almost. That might have taken your pending sell stop order, and that's too bad if it did, because the next day it just completely reversed. But again, I've got to watch out what I say. I've got to be a little bit more precise with the pending orders, or well, I've got to be a little bit more conservative, I guess. And in this case, it should have been 0.6670. So I'm going to be in the future a little bit more conservative. And sorry about that for anyone that did take the trade. But again, it's this little tiny bar that just went down just a wee bit, might have hit your pending order. It may not, depending on where you placed it. But again, this would have resulted in a loss, and there's no real trade opportunity there. Now we get to the next pair. Okay, with this pair, this is the US CAD, the daily chart, and take a look again, this red line, vertical line depicts the close of the previous Friday, and you can see it was kind of a bullish engulfing candle. It engulfed the previous Thursday's candle of the previous week, and I did mention, or I did suggest to take a buy trade right now, and getting in at the open of the next candle would have given you some pretty good pips. It actually inched its way up slowly, but eventually would have given you at least 75, 85 pips. Okay, as you can see, price went up on the Sunday, Monday, Tuesday trading as well. Wednesday just went flat, Thursday up a bit, and then Friday was the big down day. So that's that. Again, you could look at this as a swing opportunity, and to do that, I'm just going to zoom in a bit. Okay, so you can see here's the close of the previous Friday. Let's draw a trend line. Let's take a look at the swing. It's the simple swing strategy. Again, drawing a trend line down, right? Okay, you can see prices above the 21 here. Price is also above the 50. This so with this bar right here, this closed above the trend line, okay, and above the 21, and taking a trade right here would not have really given you anything. In fact, it just came right back. It would have been flat until Friday, and maybe would have given you a loss. But so that would not have worked with the swing strategy on that at all. Um, I'm just taking a look. 21. Well, actually, that's the wrong spot. There's where the trend line should have been right there, because there's no peak over here. See, price went up, but there's no down, so you cannot draw a trend line above this bar. So what we were looking for is we had three big down days. We're looking for a reversal candle. Here's the reversal candle again off the gray rectangle. Also, it reversed off the 21 moving average, broke the trend line. You would have gotten in right there at the open of the next one. That would have given you the pips, and that would have given you at least 75 to 80 pips, depending on where you would have gotten out. Okay, so that's the simple swing strategy. And that's what I did want to say on that. Now we go to the next pair. Okay, this is US Swiss franc. I did suggest last week to possibly take a buy trade above. Again, I did say above 99.55, which is right about there. Okay, and that was the reason for that was because this was a big, huge white bullish candle on the close of the previous Friday off of the 8, even though it's an 8, this was a fairly good dominant bullish candle getting in just above the high of that. Depending on where you actually placed your pending order, you may not have gotten into it. This is the candle that bothers me again. It just went up, and actually went up, I believe, all the way to the 99.55.4. So um, just a smidgen, it might have hit your order, but depending on where you placed it, it may not have. And again, reversed down on that particular day, but then the next day went up again, giving you some maybe some false hope if you were still in the trade, then down the next day, and I would have gotten out right there with a loss. But anyways, the important thing is that there was it's basically a false breakout. There's no real reason why price didn't go up higher. I'm kind of surprised price didn't go up much higher than that. It's because I mean, look, the previous day was up, was a good update, but then it just went up just a smidgen and back down and completely reversed back down. And the only thing I can think of, there's a round number here. It's the no, there's no round number. It's even halfway, like I said, around the 99.50 area. So um, when you look back to the previous highs back here, you can see price at least once it got to this area went up to here, went up to here, went up pretty well, touched the next gray rectangle resistance over here, and this price never did go higher. So just kind of strange that it just kind of stopped dead in its tracks and went down. So not much that you could have done there. And now we go to the next one. Okay, this now we're looking at the U.S. Japanese yen. This is the daily chart. This was actually the big winner. It could have been a big winner different ways. You could have taken trades. Actually, there were several opportunities. First, here's let's just zoom in a bit. Okay, you can see this was the close here on the previous Friday, and there we go. And I did actually suggest taking a buy stop order above the 110.47. That's right about there. If you would have placed a buy stop order just above there, you would have gotten in. Your order would have been taken, and that was good for a pretty good 68 pips before it started going down. So that would have given you some pips there. Now, once price started reversing, here's the reversal candle. Again, I had here's the gray rectangle you can see right here. This is resistance. This is a reversal candle. Even though it's an inside bar, I would have taken a trade just below the low of this reversal. Okay, right there, somewhere right there, getting in. That would have been good for 383 pips, depending on where you would have gotten out. So that was a good opportunity. Even if you would have just gotten out right here at the 50 or at the close at the end of that day, right? And not placed another trade, you still would have made some pretty good pips. And then the third thing I want to show you is the trend line break, and this is very, very important. So price is going up, and we're expecting a bounce off the resistance, and then we're expecting price to come down. But see, I've drawn in this trend line. You can see that right here. Okay, so once this bar right here, this price bar breaks below the trend line, also broke, make note, broke below the 50 right here, then I would have gotten in I would have gotten in at the open of the next candle, like right here, and that would have been good. That would have been good for uh, almost 300 pips. Okay, or if you were a bit cautious, very, very cautious, see this swing low right here? Okay, price is going up, price is going down. Here's a swing low, see, down, up. Just below the swing low here, placing a pending sell stop order right around there, getting in right there still would have made you some really good pips. So there were like several different ways to make some really good pips on this one pair, and sometimes that's all that's important. You just have to be aware of what's happening with price action each and every day that you look at the charts, and that's the important thing. Every day, have a quick look, especially on the daily charts or on the slightly smaller time frames. Let's take a look. Again, same thing. You can see this bar right here on the LEOD. This is the same thing, US Japanese Daily. This is the bar that broke below the yellow. This is the trend line right here. So the strategy says that once a price bar closes below the yellow, get in at the open of the next candle. And a good reason to get in is because you see from here to here, See the previous swing low? There's a lot of room to move down. So when price starts going down, it can move from here to here, giving you the open space that you need for this trade to run, okay? And again, taking a look here below the price chart, you see the blue line, the RSI is well below the yellow sentiment. So this alone, the LEOD charts, would have given you the actual trade opportunity, giving you more clarity if you were not seeing the clarity on the actual price charts. Okay, so let me just zoom back out. There you go. So I mean, just be aware of things that you're looking at. Be aware of the the down, up, down movements, and that's what price action is all about. Just make note of the swings in price direction, and you will be okay. So that's it for now. Take care, all the best, and we'll talk again soon.